Good afternoon, all, and thank you for attending our Shareholder Profiling, Investor Targeting, and Corporate Access webinar. My name is Zayla Asaraf from the Saudi Exchange Listing Division. We're extremely excited to see you all with us again today attending this webinar, which highlights the importance of raising IR awareness in the capital market. As you know, the Saudi Exchange aims to constantly develop and improve the IR function among its listed companies. And through this series of workshops that we've been holding in collaboration with MEIRA, we aim to cover and highlight the many aspects of IR. In today's topic, we will cover how shareholder profiling and investor targeting is at the heart of proactive IR and any supporting IR program. With our colleagues, Alison Owers, Global CEO at Orient Capital and Director at DF King Limited, and Valentina, Barnfather, European Head of Corporate Access at Capital Market, and from the winner of the inaugural Saudi Capital Market Award for Best IR Program, Rajhi Bank, we have Faisal, Altimyat, Senior IR Specialist. And now I would like to hand it off to our colleague, Peter Gotsk, a MEIRA Saudi board member and an executive director at IHS Markit, who's been involved in IR for over 20 years. Peter, the floor is yours.
That's great. Thanks so much, Layla. Real pleasure to be with everyone today. That's right, I've been involved in MEIRA since the very beginning and also very proud to be on the board of the Saudi chapter, working with some brilliant people. So a quick word of thanks to MEIRA for organising today's event. Obviously, it's the latest in the IR Essentials programme. Also, a big thank you to the outstanding work being done by Alicia and John, really throughout the region, but obviously today specifically in the Kingdom. Also, a big thank you to the local chapter in Saudi, which is led, I'm sure, by most of you know, by the ever busy and very brilliant Rayan Al-Karawi as well. And finally, a big thank you to the Saudi Exchange for all the work you're doing in organising today's event, supporting today's event, sharing best practice and continuing to raise the standards in the Kingdom as well. So huge thanks to everybody. So today's session will be hopefully very interactive. I'm sure you'll see there's a mechanism to ask questions, and I'm very happy to take questions as we go through. We're going to cover a number of topics, as Layla mentioned just now, mostly relevant to the Saudi market, but to the region as well. And we will leave plenty of time at the end for Q&A. So really, I wanted to start with, I guess, what we could call the basics, which is kind of getting to know your existing shareholders and the importance of knowing your existing shareholders. In some markets, Alison and I sit in the UK, and in some markets like the UK, it's a relatively straightforward exercise. Most quoted companies have access to some company court law called Section 793, gives them very detailed and very timely information on their shareholders. I know in the Kingdom, getting information from Tadawul and the CMA on your shareholder-based local shareholders is very good, very detailed and very quick, but also there are challenges around understanding who your foreign shareholders are. So I wanted to really sort of start with Alison, given this is one of your areas of expertise. Perhaps you can talk a little bit, Alison, about the challenges and also the mechanics and the benefits of understanding who your shareholders are, because without understanding that core information, how you then communicate with your investors, if you don't know who they are, who's underweight, overweight, and indeed who's not on the register, makes it very, very tricky. So perhaps we can start with you, Alison, if that's okay.
Of course, thanks, Peter. Alicia, if you could go to slide 6, please. I think that would be helpful for the audience if we've got that one up while I'm speaking to it. So ultimately, you cannot do any kind of shareholder profiling or targeting or think about who the ideal investors should be on your shareholder base until you've done some basics around this, which is actually to identify who your investors are and where they're holding right now. So you can't possibly think about launching into this unless you've got a very good idea of who they hold, where they hold, what type of investors you've got. So we've always described the shareholder analytics as the sort of benchmark and really the main part of your toolkit that you need in order to provide that investor relations function. So Peter's quite right. In some parts of the world, and I should say Orient as the company I represent, runs analysis for about 1,800 listed issuers. So we've got a very good complement of knowing how it works in strong disclosure markets like the UK, like Australia, like South Africa, but also non-disclosure markets where it's a bit more tricky to get behind the information. Ultimately, you will, we'll hear from Faisal, I guess, in a moment on how it works in practice, but you will need to have a strong understanding. There's I guess in the region there's retail, a strong retail understanding, but quite often the institutional ownership is a bit harder to get behind. So quite often it's held in custodial accounts. There's a bit more magic behind it to try and unearth those institutional positions. That's where the likes of groups like us, Peter, IHS Market, come in to give you a bit more expertise around it. What you're looking for when you've got that base level of data, you're really, as Peter said, you're really trying to understand ultimately who your holders are, but then conversely who your non-holders are, and that's where it comes into that targeting mode. Where are they based? What type of investors are? Quite a lot of what you need to think about in relation to this is also what type of stock are you? So a level of sort of entry level into the targeting remit is actually being able to understand where you sit yourself. So what appeal would you be to investors who might want to be investing in you ultimately? Peter, I'll stop at that point. Is there any other questions, or should Faisal give his view on, I guess, how it's working in practice?
Yeah, that's brilliant. That's a really good overview of the challenges, but also the sort of necessity of getting behind your shareholder base. But no, you're right. Faisal, would be really good to hear how you and Rajhi tackle this. You know, I know there's good visibility locally, but how you get behind the holders for your foreign investors, that'd be very good to hear.
Sure, yeah, absolutely. So the way we do it is, as you mentioned, you can get the share register from the local exchange, the Saudi exchange. You can request the share register. So we do it on a monthly basis, and also we use various tools. I don't want to, disclose the systems that we use, but we have few systems like yours that you can track your investors and you see the overall ownership, because as you know, you have some companies that they have multiple funds. So in order to track the whole investment portfolio, you need to add all the funds together. So it might be hard to do through the share register, but it could be easier using different systems. So you can track each investor, what's their investment style, their investment strategy is, so you know exactly what type of investor they are. Are they growth? Are they investing you through an index, or whatever the case might be? But there are great tools, great systems that you can use, to give you a real analysis of your actual share register.
That's great. Thanks, Faisal. And I know you set a very high standard for IR in the Kingdom, so it's really good to hear how Rajhi does that. And Faisal, if I could stay with you for a moment, different IR departments have different goals for the year, different KPIs that they set. I'd love to hear a little bit about, what KPIs you set, and whether that includes basic things like number of investor meetings, maybe initiation rates from those meetings, or how you go about setting your goals at the beginning of the year.
Sure. Okay. So we have, we track a lot of things. So one of the main ones is looking at the split between retail and institutional investor, and so we evaluate that on quarterly basis. Number of meetings that we do, number of conferences, the quality of our disclosure, how fast we disclose, our presentations, our financials, our earning calls. So we track all of that, and also, as you said, number of meetings that we do, number of conferences. Even we track ESG funds. We look at their exposure with us, and we also look at foreign investors as a % of the total shareholders of Rajhi Bank. So we have a lot of KPIs that we track, but these are the main ones that we look at on a periodic basis.
Great, Faisal. Well, thank you for the insights. Really interesting. Valentina, if I could bring you in, please. I'm sure the audience would love to hear a little bit more about, Capital's investment approach, and also the role played by corporate access in that. but also I think, I think Capital is right, fair to say, takes generally a long-term approach, a long-term horizon. Maybe you could also share some thoughts on the benefits to emerging market or developed market companies about getting longer-term investors on your register, especially for those markets that have a predominance of retail investors.
Yeah, absolutely. So, Capital is one of the biggest long-term asset managers in the world. So in America and sort of Europe, it's very well known. We have 2.5 trillion of assets, and that's divided into three funds, three investment groups, which is Capital World, Capital Research Global, and Capital International. And all three of them are basically treated as separate investors, and they're not allowed to share meetings. We do take a very long-term view. We have, I think, our average holding period is about double our peers. We also don't have any passive index funds. We're not a hedge fund. We are a value long-term investor. And it's a big responsibility to be investing money on behalf of people's pension funds. And we do take it very seriously, which is why our portfolio managers are evaluated over their investment performance over 1 year, 3 year, 5 years, 8 years, which is quite unique to Capital. There is a good reason to want us on your shareholder list is for that long-term nature and that stability, and helping to lower the volatility in your share price. We also do see it as a partnership. If we're going to invest in a company, we want to get to know management very well. We want to be there in good times and bad times, and not have a short-term investment horizon. So generally, we do see it as a partnership. And that's one of the reasons why we have a corporate access team internally, is to help forge those relationships. We like talking to management. We like hearing about plans. We like sharing your vision and seeing what you're going to be doing, not just reading results notes that tell us about the current position. So does that answer your question? Or?
Yeah, no, I think that's great, Valentina. Thank you very much. Really helpful insight, and we'll certainly come back and explore, Capital's investment approach in the region in a bit more detail shortly. Faisal, I can come back to you. Obviously, you spoke about the retail investors and the balance between retail and institutional, and the balance between local institutional and sort of foreign investors too. Can you talk a little bit about how you split your time, and maybe a little bit about the structure of the team that sort of, again, focuses on those different constituents, and the involvement of management as well?
Sure, yeah, absolutely. So our investor relation team, we are part of the finance group here in Rajhi, and we report directly to the CFO. The team is 5 people, and we're 2 people focusing on institutional investor and the remaining on retail investor. So our job is to look at, our ownership from the institutional investor, and we track local versus foreign. Just the fact, I was looking at our QFI, our foreign ownership today, it stands about 12.5% for Rajhi. The number have been growing. I remember back in 2019, beginning of the year, we used to be 3.7%, and we closed 2019 at 11.1%. But 2019 was an amazing year, not just for Rajhi, but for the whole market, because it was the year of inclusion in the emerging market indices. So Rajhi, as you know, is the largest weighted company in both MSCI and FTSE. So we gained the benefit from the inclusion. So we had more exposure to foreign investors rather than only local investors prior to that. So we focus on targeting new investors by looking at foreign investors mainly, because as I mentioned, we were included about 2 years ago now. So we target through corporate access and companies and our sell-side analysts. So we target the new investors. Mainly we target foreign investors, if that helps, Peter.
Brilliant. Thanks, Faisal. That's really helpful. Appreciate that. And we should get into the sort of meat of targeting in a moment. We'll come back to Alison for that. A quick question again for Valentina, and kind of going back to what we started discussing just now. Many markets, developed markets and emerging markets, will still tend to engage with institutions like yourself through their brokers, and maybe some are a little bit reticent to engage directly. What would your message be for Saudi issuers with regard to direct engagement today?
I think direct engagement can help you form sort of closer relationships. The other thing is, someone like Capital is fairly complicated. We're very global. We've got offices all around the world. And by coming direct to the corporate access team, we'll be able to direct you to the portfolio managers that really matter and be able to book things at a time where you'll capture everyone at the same time. In the past, we have been relying on brokers to explain our investment philosophy and structure to companies, and some of that messaging I think gets lost. We also do have the issue of MiFID and the changes that that's caused in the industry. So corporate access is now paid for, so that creates its own market dynamics in who gets offered what meetings. So we're very happy to take meetings if it's easier for a company. They've given a structured day to JP Morgan or Goldman Sachs. We're very happy to take the meetings, but at the same time, we will do a lot of outreach ourselves, and we just find it's a smoother. We also get confidentiality that way, so we just find it's a much smoother, easier dynamic if we can arrange it directly.
No, very good. And I know you're very busy. It's a sort of the theme across, I guess, all corporate access departments. We hear a lot of our clients say that, we tried to engage, we didn't hear back. I'm sure they're not interested, but I guess it's not necessarily not interested. It's just a factor of time, and don't give up. Keep trying, right?
Exactly. I mean, we all try to get back to everybody. So the way we're set up is a little bit different than some of the corporate access teams at other places. So we're not necessarily getting in between our investors and brokers. So we're not dealing with all the weight of the broker incoming requests. So we've got time to spend with companies, time to help them. And I would hope that everyone, I'm part of a global team of 14 of us. So we also have one of the biggest teams on the buy side, and all of us would definitely try and get back to companies. We wouldn't leave them hanging.
Okay, no, sure. And Valentina, one more quick question, I guess, just feeding off the back of that. Before Capital will take on a new investment, what are the mechanics? What do you expect from a potential investment?
So obviously, if we're going to take a position in a company, we're looking to take a position that we can happily hold for a very long time. And investing in a company is also investing in the people that run that company. So we take the due diligence very seriously. So we will always want to talk to management, and we can't recommend buying something without having met the management. So quite often what would happen would be the initial outreach would be, can we have an introductory call with investor relations? Then a few weeks later, when the analysts have done more research, they'll come back and they say, can I meet with the CEO, CFO, or some divisional management? In a non-COVID world, we'd likely do a research trip and get on a plane and try and spend a morning with you. So we are quite demanding upfront, but once that's all done and it's checked out, we're then on the shareholder list and we hope to stay. And after that, it would be in a sort of steady industry, we'd be quite light touch, and maybe once or twice a year we'd want to check in. If it's faster moving, we'd increase the number of meetings we'd like. But it's a very crucial part of our investment process, and one we put a lot of store by company meetings and spending time with management and getting to know them.
Yeah, no, brilliant. Thanks for that background, Valentina. Super. Well, we should move on a little bit to talk about targeting. And Alison, if I can come back to you. And building a list of targets isn't easy. There's a lot of public data out there, an essential starting point, but probably not the sort of final destination. There's a lot more to it. I know you and your team do a lot of this work. And I guess at the end of the day, it's really important for people like Faisal with his management team to make sure that the management time is maximised as much as possible, so that if that good fit list of targets is critical. Maybe you could share any advice you have for issuers in the kingdom, especially those that are, maybe thinking of initiating a targeting campaign as we start to emerge from the pandemic.
Of course, I'd be happy to. Alicia, if you could go to slide 8, I think that would help resonate with people if we're sort of. So again, for the audience here, there's maybe some basics, some sort of stronger on this. So I guess really it goes back to those fundamentals of, in order to do this, you really need to understand your own shareholders first. That then leads you into, as Faisal quite rightly mentioned, there are systems that can do some of this stuff for you, and we refer to that as a sort of quantitative way of looking for it. It will be spitting out things like who are your non-holders, your actual shareholders, how do they sit amongst maybe a benchmark of peer groups for you. So you're benchmarking yourself against others and other groups, and who invests in one company that may be sort of comparable to you. So that's one way of starting to think about it and look at it. There's an awful lot of intelligence you can get at this point though, and we call this the long list. So that's what should be appearing on my blue box there, and maybe a way to think about it, because there will be an awful lot of, you could get, could spit out 150 names of investors. Which ones then are the right ones for you? How do you bamboozle yourself with all this information? Do you start approaching everyone? It would be very scattergun in order to do that. So you then start to need to think about honing that in the right direction. So as fundamentals to this, what's on this slide right now is some of the stuff you should be looking at, just to help you get a good assessment for it. Again, if we come to Faisal post this, I'm sure he's already doing it and his team are. But looking at the equity under management, are they the right size of investor that could invest in you? Where are they based? Do they fit where you are actively wanting to target? So if you're wanting to put your management team, not currently because we're not doing it in the right way, but if you're spending your team's time putting them on the road or doing road shows, for instance, is it the right location? You've got to think at this stage how much time and impact you as an IR team and group could have that isn't going to waste management's time later on. So you're sort of doing the preemptive element to this, as Valentina quite rightly said. Alicia, if you could move on a slide. Oh, Alicia, if you could move on to slide, I think that's perfect, thank you. This is just a view for you of some of that. If you haven't seen this before, this is just a quick view of some of that intelligence it can give you. So it really is, how are you benchmarking non-holders, shareholders, how does it work? I just wanted to give you a visual here of the type of information you get out. So again, there's an awful lot you can give. It could be, as I say, 150 names. Who on earth do you choose from? So if we move to the next slide, Alicia, this is what we then have started to become, corporates are becoming much more sophisticated on. So this, again, in my blue box, this should say the short list, but this is the qualitative view. So really honing in on who are the right people for you to be meeting. As Faisal said, there's an ESG element to this these days. So it's not simply meeting one person, it might be meeting a number of people, and there's different qualifications that those investors want you to make sure you've approached. Again, thinking about what type of stock you are. A lot of companies think about the way they're targeting by tiering it. So they might have different levels of tiering. So, a tier 1 investor that they want on their register in their shareholder base, which is in the next year, and they think about it and they're very active in doing that, versus one that might be a tier 3, which is a bit further away for them in time. They're less ambitious about initially, but there's someone they want to approach. And a lot of this, as Valentina will well know, and Faisal will, is about relationship build. So some investors aren't going to just have one meeting with you and immediately invest in you. They will clearly want to have done their due diligence. Some of the Asian investors we come across, it could take 2 years before they may want to come onto your register. So a lot of this is about a slow build. So tiering those different types of targets into fit is part of then that qualitative approach. So your expectations are set, how you're doing this, and I think checking them back in with the targets you've set yourself, re-looking at those every 6 months, every year, regrouping if it's not quite right, reassessing it is all part of this. But hopefully that slide gives you a useful insight into one of the ways we think about it with the clients we work with.
And Alison, does your methodology tend to change when you're sort of working with emerging market clients versus European clients?
Yes, I suppose so. So it's, you know, there's less access to certain information. The peer group might be different. You need to think about where you want to sort of go after. You know, the hunting ground to those investors might be a little bit different as well. We've got some slides later on, and we're happy to share those with corporates post this event on, you know, where the investment is coming into the kingdom. So, you know, regionally where you should target it. So generally I guess the fundamentals of what targeting is not really changing. It's the right investment for you, but there are nuances to each, you know, region or each stock, very definitely.
Yeah, brilliant. Thanks, Alison. Really detailed overview. Faisal, it'd be great to sort of bring it back to you and understand a little bit about, you know, how you go about targeting. You spoke a little bit about how you identify shareholders today and the mechanics and tools you have to do that. It'd be great to understand, you know, with targeting, how you've done that pre-COVID and during COVID, and maybe a little bit about any challenges you face when you've got the targeting list to then go from the target list to communication and maybe initiation as well.
Yes, sure, absolutely. Alison, you spot on the way you target. I mean, in theory, you would think targeting new investors would be easier, but it's not about how many meetings you do. It's about who you're meeting exactly. So, I mean, what's the benefit of meeting an X capital in the US, but they're not an investor in the region? So there's no point of that. So first step, you need to identify each investor, or when you target a new investor, if they're the right fit for you. Are they investing in your region or not? Are they investing in the same sector or not? Some, as you know, some companies, they would invest in Saudi or emerging market or GCC, but for example, they're not focused on financial sector. They're more focused on petrochemicals or whatever the case might be. So you need to identify if they are a investor in your sector, if they are an investor in the region, and if they're investing in your peers or not. That's one trick we do, is we look at it's all public data, so you can see your peers, who are their main investors are, and you can see, you know, in companies, what companies are investing in your sector and your niche region, so you would target those investors. And as you mentioned, Alison, sometimes when you meet a new investor, you will take an initial call with them, you have a meeting including the management of the company, but later on, you don't see the conversion, that they are not an investor yet. So you might do a follow-up, or they might ask you, you know, ESG specific questions, or, you know, another team from that company, they would have different questions, or they have like a what do you call it, like a form that you need to fill, or so sometimes it takes time to convert from a potential investor to an actual investor. So yeah, you just need to be patient, and when you target, as I mentioned, you need to see each company, what their investment strategy is. Are they value, growth, or are they an index, or whatever the case might be? So you need to identify smartly, and you target the right investor in your case.
Great, Faisal. Thank you. Really insightful. Before we move on, I just wanted to remind everyone listening today to submit any questions you have through the portal. We can then pick those up and ask them in real time as you go through, or we can save them for the end. So please don't be shy. Please do ask questions that you may have for the panel today. I wanted to sort of switch gears a little bit, if that's okay, make sure we leave enough time. Everyone's alluded to ESG, and it's impossible to have a conversation with a client or a corporate nowadays without ESG, you know, coming up to a lesser or greater extent. It is the sort of mega trend today. I want to, I guess, maybe start, Valentina, with you, if that's okay. Maybe get a feel for how Capital Group and I guess you and Corporate Access are looking at / dealing with the topic of ESG.
So the first thing is that we don't have specific ESG funds. So we wouldn't be flagged up as sort of ESG investors. But having said that, we've always taken ESG very, very seriously, and it's integrated into our investment process. We're also in the process of building out ESG sector specialists who will become much more more vocal in talking to companies about what we expect, trying to share best practice from good companies to bad companies. And they're also developing our own proprietary frameworks for each sector. We know that people want to hear from capital. They want to know what we're doing and what we're saying and what we're looking at. And to that end, our head of ESG has started to write letters to companies addressing certain issues. So they'll focus on a couple of themes a year. They'll do some deep dives. They'll look at best practices, and then they will send letters out to companies telling people what we expect. And a good example of that was when we sent letters to every single company that we hold about board diversity earlier in the year. So I think it's a kind of watch this space. You will hear more from us. In practical terms, if companies are doing ESG roadshows, they can come to the corporate access team and we will link in an analyst and somebody from ESG. They tend to take their meetings together at the moment because ultimately the buying or selling decision will be with the analyst. So it's very much integrated.
Yeah, no, brilliant, Valentina. And I mean, the pace of change in the investment world with ESG, do you want to share a comment there?
I mean, it's so important. It's so important for, for us attracting funds, for, people, they want to have ethical holdings in their pensions. So it's hugely important in an area that we've been investing in. So we do have, our team is growing, as we speak. And I think also maybe we've been slightly behind in that we were American based rather than European based, but we're definitely catching up, and you will hear more from us about it.
Fantastic. Thanks, Valentina. Faisal, perhaps I can sort of switch it to you to sort of share a little bit. We talk to many companies in the region, but it seems especially the banks are inundated with questionnaires about ESG to be filled in from investors. Obviously, you're getting opportunities to report against different frameworks, and it's quite confusing for companies to know exactly which way to turn. I'd love to hear a little bit about how you manage that ESG workflow, the demands of investors, and again, a little bit about how you're structured to deal with that. Is it all through the IR function? Do you have support elsewhere in the organization as well?
Okay, sorry, I was on mute. Yes, okay, so ESG, it's, as you know, it's new, especially in the region, in the GCC, and especially in Saudi. So it's kind of new, so we're still getting used to it. And we in Rajhi, we started our ESG journey in 2018 when we first issued our first ESG report. Back then, we wanted to see, where we stand as a company, what kind of disclosure do we have, what kind of policies. So we started, just evaluating where we stand, and we've been learning from our experience. We've been improving over time. Disclosing more policies, disclosing more frameworks that we do. So we're still in that journey. We have KPIs in terms of ESG. So we're still learning in that area, and we're trying to improve on quarterly basis. Currently, on our earning calls, we have one slide that we talk about our ESG contribution for the community, for everyone. So we have one slide that we update on quarterly basis, and as I mentioned, it's a learning experience. So we are talking with different investors, with different analysts. As an investor, a global investor, or a analyst, they look at companies all over the world, so they have a better experience than us in terms of what other companies report on in terms of ESG. So we're doing a lot of feedback from different investors. What are you focusing on? What do we need to do to improve our ESG? I mean, we reached the point that we don't think of ESG as just a check mark that we need to have just to satisfy some investors that okay, we have ESG, but we honestly do believe that if you implement ESG principles and policies, it will for sure contribute to your bottom line profit. So, you know, we're improving time over time. We have done some great ESG frameworks, initiatives that we have done this year, last year, and the year before. We have a dedicated ESG section in our annual report. So as I mentioned, it's still a journey, and I understand. I think everyone here in Saudi would agree that it's kind of new here in the region, and I see a lot of companies that they didn't disclose anything in terms of ESG 2 years ago, but now if you look at the market, you see a lot of improvement. Even the government is pushing for sustainability, ESG. A big part of the Vision 2030 is the sustainability aspect of it. And even if you look at, you know, the new government projects, you have all the renewable energy. So even that helps bank in terms of, you know, lending to those projects. But yeah, as I mentioned, it's kind of new, but I see, I mean, drastic improvement if you compare it to a few years ago.
Brilliant. No, that sums it up very well. Thank you, Faisal. Alison, maybe come to you and ask for your observations on, I guess, client needs, not just in targeting, but maybe in targeting, but I guess in the broader IR workflow for your clients when it comes to ESG. What have you seen in the last year or two?
Yeah, well, some observations really as well from what the others have said. So absolutely, Valentina, I think that we've certainly seen it going from niche to being much more mainstream. So a lot of our involvement was about, here's my shareholder base, how can I tell, you know, how many green funds I've got, or what is, you know, the right nuance behind there of the individual funds. So that's becoming, we can see it much more mainstream. So it's sort of embedding itself here, there, and everywhere. So it's not specific to one fund necessarily. There are obviously dedicated funds, but they're becoming more mainstream. Faisal, to pick up your point, I think we're definitely noticing that there is an ESG specialist component in a lot of the investor relations teams we work with globally. So particularly we've seen it in mining companies, banks, they seem to be sort of the first ones off the traps of this, that there's an ESG specialist sitting within those investor relations teams now, partly to deal with the big questionnaires you get, I guess, but also that there's, you know, there's a rounding up of that intelligence, because it involves not just the IR team, it involves a lot of people within the company dealing with those questions. So it's almost a good sort of center hub for it coming through IR. So we've certainly seen that. I think the last observation I'd make from direct impact we're seeing is that as your, you know, as the region opens up a bit, as your shareholder base changes, there's perhaps more internationalization, and you're looking for sort of, you know, different investment from other countries. There is a standard expected around how people will want to see the voting mechanism, so that there will be, I guess, perhaps an element of how people are voting with their feet if they're not seeing what they are expecting to around how a company should be behaving with the way that they're responding to ESG. So diversity, we've seen some high profile instances of that this year, where we have definitely noticed in AGM season we've run shareholder requisitioned resolutions coming through from some of the larger investors on things like climate and how it's being tackled. So companies are going to have to think about that, I guess, the more they're opening up to this. So that would definitely be an observation I've got. So it's not something that's going away, as we all know. It's something that has to be tackled, but also there's a absolute requirement for this going forward that will become more mainstream, that people need to be aware of.
Yeah, thanks, Alison. I couldn't agree more. It's the same observation. IHS Market, we've got a big team on ESG. We're merging with S&P, as you know, they've got a big operation there as well. So I think that's going to be a great area to keep under observation. So I just wanted to flip to a couple of questions that are starting to come in, and thank you for those. Perhaps Faisal, the first one for you. There's a question around how can you know your peer ownership below the 5% threshold in TASI? So I don't know whether that's something you have a technical answer for, or something you can sort of advise on.
Sure. Okay. So the way it works with the Saudi Exchange, if you go to the website, the Saudi Exchange, it shows your ownership above 5%, but below 5%, you cannot see it. I mean, unless through, as you know, some companies, they disclose their positions, some global capitals, like let's say, for example, Group Capital or, BlackRock or whatever the case might be, they do disclose it. So these systems will show you, their ownership in you and in your peers and in different sectors. So it's public information, but typically the way you get it is through a system. Tadawul only shows above 5%, but not below 5%.
Yeah. Thanks, Faisal. Alison, I don't know whether you have anything to add on that. I mean,
look, just to add to that, that's where specialists like us come in, and you do, Peter, and your team. So ultimately, you do get a certain level of information. If you want to get behind that and go a bit more sort of intensely into that, that's where there are specialist teams set up to help you on that. So yeah, I would say if you're looking for a deeper dive, that's where to use those groups.
Very good. Valentina's question for you coming through. How active are corporate access teams with managing the reach out programs as opposed to leaving fund managers to run their own access through their broker relationships? And the second part of the question, do you see that changing going forwards? And the third part, how do you see spilling over into emerging markets from a corporate access standpoint?
Okay, you might have to remind me if I get these out of order. So I think the first question was, how does the corporate access team work? Do we leave portfolio managers to do their own thing? What tends to happen is, where portfolio managers, analysts have long-standing relationships and they've held a company for 5 years, that's fine. Any meetings can go directly to them. But any new outreach tends to come to us, to the corporate access team, for us to manage. Some companies do find, because we are split into 3 investment units, that it is much easier for them to send us an email and then we can coordinate across the 3 units. At Capital, the relationship with companies should be with the analysts. So what happens at Capital is an analyst gets to know a company, puts a recommendation on it, an analyst can actually hold a pot of money in that company themselves, and then they will try and recruit portfolio managers to come in with them to get the percentage holding up. So companies really should be targeting the analysts, not the portfolio managers. But I've been here for two and a quarter years, and the number of meetings that we've been doing that have been direct to brokers versus now that it's direct companies has increased dramatically. So that was it. And the second question, was that the one about capital in emerging markets? It might have been the third question, but if I answer that one, then tell me which one I've missed. So yeah. It's quite obvious that on a lot of Alison's charts, you didn't see capital on there. Generally speaking, when you think of people like Wellington, Norgis, Fidelity, capital is in that kind of bracket. We're a similar kind of investor. We normally come up on the same things. We didn't come up on that because historically we haven't been a huge investor in the region. But as our assets have grown, and as we've hired new analysts, we've now got the capacity to look in the region. So if I look in the last year, for example, since June, we had an analyst from Capital International who asked for introductions to over 30 companies in the region. So there's and there are other people who are becoming interested. So the fact that we're not there now doesn't mean we won't be on those shareholder lists tomorrow. So I would view Capital as a sort of big opportunity to have another long-term investor on there. And the other question, I'm afraid I've forgotten.
No, I think you covered it. It's just sort of how you see it changing going forwards. And Valentina, just sort of off the back of those questions and your answers, is there anything you can share when it comes to emerging market investments that Capital is looking at particularly closely, sector, size, any type of sort of metrics that you're tracking particularly closely?
So we cover all sectors. We are not, we're global and it's all sectors. But we are very well known for our small cap. We have a very, very sort of market leading small cap funds. But small cap for us is anything under $10 billion. So it's quite big. So I think that fits quite nicely with the region, that there are just a lot of companies that would fit in that kind of bracket that would be very attractive to us. But yeah, we will have to, our relationships aren't very strong. So this is, to Faisal's point, this might take time. But I would, for any companies, if we get in contact with you because we want a meeting, it already means quite a lot of research has been done behind the scenes to get to that point. So
great.
Hopefully you'll see it change on the shareholder list.
We'll do it again this time next year, and we can.
And we'll be on.
Absolutely. Faisal, you mentioned briefly earlier on about conferences. This again is a question that's come through. Can you talk a little bit about how you use conferences to engage with existing investors, meet with potential new investors, how you select conferences that you attend, and the impact of COVID and virtual versus physical conferences?
Yeah, sure. Okay, so we attend quite a lot of conferences with the involvement of our senior management. Typically, we go to conferences that are more focused about emerging market, about Saudi market, and especially for financial companies. So we do our due diligence, and we look at each conference if it's the right fit for us or not, and based on that we select the conferences that we attend. And also we do a lot of non-deal roadshows in terms of targeting new investors. So we talk with our sell-side analysts to reach out to new potential investors. So if we're if we are looking for a new targeting investors, but for existing shareholders, typically conferences with our main analysts, those conferences, and we meet our existing shareholder typically on quarterly basis. During our earning call, we do earning calls on quarterly basis with the involvement of the senior management. So typically we do our earning call and we meet our existing shareholders through the earning calls.
Okay. And in terms of knowing what conferences are going on, it's always a challenge for corporates to be aware of all the different conferences. Do you feel you're well informed about all the conferences and I guess the right ones for you?
I want to say we are lucky in Rajhi Bank. We are the largest company in the market, so we have a lot of analysts covering us. So we do get all the information sent to us, and typically the conferences they want. I'm bragging now. They want us to be on the conference just for being, the largest company on the stock exchange, the largest in the emerging market indices. So we typically get invitations from all conferences.
Okay, brilliant. And you're right.
If you reach out to the sell-side analyst, they can tell you, what conferences are there for you that fits your company. So if you reach out, you will receive all the information that you want.
Yeah. And I'm sure you have unique insights as a bank as well. But that's really helpful. Thank you. So there are other questions coming through. I don't know who wants to answer this one, but it's an interesting one. Obviously, exchanges around the world, at least pre-COVID, were taking their listed companies on roadshows, especially from the emerging markets to New York and London, and maybe to Asia a little bit as well. So the question is, should exchanges play a role in helping their listed companies, and if so, what can they do more than they are today? Who wants to take that?
Shall I start with? Oh, you go on, Faisal, you go first.
No, go ahead, Alison.
I was just going to say, look, you know, at the end of the day, any help you can get as a listed issuer in trying to get out there and meet contacts and meet relevant parties for you, I would embrace, I would use. I would keep a very open pair of eyes, do your own research in making sure that you've done your homework on who you're being put in front of, because if you've looked at it yourself, you've qualified it yourself, you know you're not going to be wasting time. Get IR to screen it first before you again think about putting it in front of management, just so that you can do a sanity check there. But why not use, you know, sort of every tool in your armory to make sure that you're at least sort of spreading the word and getting your story out there. It's quite a competitive world these days, and probably even more so than it used to be. So why not use it?
Yeah. On that, the Saudi exchange, Tadawul, they're honestly doing an amazing job. I mean, there are conferences that they arrange on a quarterly basis, I think, through different brokerage houses. So they're helping all listed companies, you know, to meet investors, to even target a new investor. The exchange also, they have a IR toolkit to help companies, you know, what's the best practice IR. So honestly, Tadawul, they're doing an amazing job. I'm not saying this because they're sponsoring this panel, but honestly, they're doing an amazing job. They do have a specific team to help IROs in the kingdom, you know, to reach out to whether it's brokers, if it's whatever you need. There is a dedicated team of RMs that they can help you with whatever you need. I was looking at some numbers today preparing for this call, and I noticed that the foreign investment in Saudi back in 2018, it used to be 13 billion Saudi riyal, and now we stand at 216 billion riyal. Of course, the inclusion helped a lot, but the effort of the exchange, it for sure helped a lot by targeting a new investor, by organizing calls like this, by you know, doing conferences, the workshops that they do. They're helping. They're doing an amazing job in that area.
Thanks, Faisal, and I can only echo that. You know, I've spent time with many people at Tadawul, or sorry, the Saudi exchange, and yeah, they're very proactive, very forward-thinking, and you're quite right. So we're getting close to the end of the session, and maybe Leila wants to come back in a moment and make some concluding remarks. Before she does that, maybe we can just go across the panel and have any sort of share any final observations. What else can you know, what else could companies in the kingdom be doing to harness the potential, as Faisal said, the inflows of foreign investment, institutional investment, and FDI as well. FDI has gone up very, very heavily in the last few years. Also, it is truly impressive, and it's incumbent on Saudi companies to sort of harness that potential to bring more foreign investment into them. With the foreign investment comes expertise, and with expertise comes the potential to grow the business and revenue. So it's a great exercise to focus on. So really, if we can go across the panel one final time to share any sort of concluding thoughts or bits of advice, I think that would be great. And maybe Alison, you're first on my screen. Maybe we can start with you, if that's okay.
Yeah, no, that's okay. If it's useful, I have got a practical application slide that, again, happy to share with the audience, which might be a good summary for this. But I'm just looking at it very quickly to think. I think making yourself visible, making yourself available. I always hear this on every conference and sort of session I attend about being responsive. So if you're getting incoming, make sure you deal with it promptly. It shows your interest as much as anything else. If I hone this back to the practicalities around knowing who your shareholder base and is that in that targeting, it will refresh, it will change. You will need to keep looking at it with a fresh pair of eyes to make sure it's relevant. So it's not something you can do once and sort of sit with. So that would be my sort of key point for today.
Yeah, as you say, very practical, Alison. Thank you very much. Faisal, you've shared a lot of great advice today. Any final thoughts for the attendees today?
Yeah, sure. I think it's very important, you know, for IROs and companies to be proactive when communicating with the investment community. having clear and consistent messages, and providing high quality data for investors and analysts. And finally, ESG.
Yeah, we can't afford to ignore ESG, right?
Exactly, yeah.
Okay, so thanks, Faisal. Really helpful, insightful, and timely as well. And so, Valentina, I think having you on the call today has been really great for the audience, hearing more about corporate access, obviously learning more about capital, and looking forward as well. So thank you for joining. Any concluding comments or words of advice for everyone today?
Well, I used to work on the sales side. I was an analyst for many years. So if I take that position and my current position in internal corporate access, I think my advice to companies would be definitely get some visibility by joining conferences and having close relationships with your sell side analysts, because they're brilliant for generating ideas and for getting your message out. So I'd encourage that. But also, when you do get a direct approach from the internal corporate access team, it would be really helpful if people responded to it and got excited that a big investor is interested, and take those direct approaches seriously. So I think those are my 2 pieces of advice.
Very good. Thank you, Valentina. Brilliant. Layla, I don't know if you wanted to come back in and close the session. If you're there, you'd be it'd be great if you could. And before you do, just one final comment from me. Well, obviously, thank you everyone for joining. A huge thanks to the panelists, to MEIRA, and to the Saudi Exchange. And a final message from Alicia: if everyone could participate in the IR practitioners survey, that would be obviously hugely helpful. And there will be a link in the next MEIRA newsletter, which will be coming out very soon. So that's it from me and from the panelists. Thank you, everybody. And Layla, over to you.
Thank you, Peter. Just to reiterate, I would like to thank all of our speakers today. I'm sure our attendees have enjoyed this thrilling, brilliant discussion. And just last comments that this recording will be available and shared on social media platforms. If you have any further questions, just like our colleague Faisal mentioned, we have a dedicated team that will be able to answer all of your inquiries and questions and lend out a hand and help you sort out any difficulties you're having. Just please feel free to email us at listing@tadawul.com.sa, and we'll be happy to answer all of your questions. And on behalf of the Saudi Exchange, I would like to thank all of our speakers and our moderator, Peter. Couldn't have done it without you, and all of our attendees for joining this brilliant discussion. Thank you all.
Thanks, Layla. Thanks, everyone.